More bad news for Netflix as Piper Jaffray's annual teen survey reveals the real streaming king may have just lost its crown. Let's get to Julia Boorstin with all the details. Hi, Julia.
Well, Melissa, Netflix shares have been under pressure, down about 30% from highs that the company hit on May 1st. But while the stock has been dogged by concerns about a slew of competition hitting in the next year, as well as rising content costs, one big concern could be a nearly 15-year-old company, YouTube, the free ad-supported service making gains on Netflix, which has given up its long-held lead on daily video consumption among teens. This is according to the new Piper Jaffray teen survey. Now, YouTube has the biggest piece of teens' daily video consumption at 37%. That's 5 percentage points higher than just 6 months earlier, beating Netflix's subscription service, which now has 35%. That share has dropped 2 percentage points from the prior survey. Now, it is worth noting, though, that both of those companies dwarf traditional cable TV, which is continuing its decline, now down to 12%. Hulu and Amazon Prime were both flat at 7% and 3%, respectively. Now, analysts are also starting to weigh in on Netflix's growing host of rivals. Today, Aegis Capital lowered its price target for the stock and reduced its subscriber estimates for Netflix following an analysis of usage in 56 countries. Now, the stock was bolstered a bit, though, by a more bullish report from Oppenheimer with an outperform rating on the stock, noting that data on Netflix in India looks promising and that the third quarter content slate looks strong enough to keep the service competitive. So it was certainly a big mix of reports today, but Netflix did share, and the Netflix shares did end the day down about 1%. Melissa, back over to you.
That sounds great for YouTube, Julia, but at the same time, I mean, is Google monetizing this lead amongst the teens? Can it?
Well, Google has monetized it, though remember, we don't know exactly how much revenue YouTube brings in. There have been a range of estimates here. But the question, though, is what teens are watching on YouTube, because some of that content is professionally generated content, which monetizes at a higher rate, both for the content creators who are putting it on, whether it's a traditional media company, and also for YouTube itself. And there's the user-generated content, which tends to have lower ad rates. So it is a range, and we don't have that much information because Google just does not disclose anything that specific. But it has been a huge moneymaker, though you have to wonder, if you look at the success of some of these newer apps like TikTok, did YouTube miss the TikTok trend? Could YouTube have been TikTok if they were more aware of those rising trends?
All right, Julia, thank you. Julia Boorstin in Los Angeles. Should Netflix be worried?
About a lot of things. I mean, when the Disney announcement came out, I mean, good for Tim, by the way. They should be worried about a lot of things. And not for me to say, Reed Hastings come out last quarter and basically said, you know what, competition is there. They seem to be worried for the first time since they've been a publicly traded company. But in terms of Google, I mean, it's had some difficulties, not unlike Amazon, not unlike Facebook. Twice it's failed at 1,300, now below 1,200. You have to ask yourself, I mean, although they might be winning this war, the stock hasn't traded particularly well. So I think Netflix, that 250 level we flagged a number of times, it held. So I think it's a tradable bottom. But in terms of being worried, to answer your original question, absolutely it should be.
They need another quarter like they had last quarter.
Yeah, look, I think this whole, first of all, just streaming wars and where's YouTube playing? You know, I wanted to grow up to be a baseball player. My 6-year-old wants to grow up to be a YouTuber. I clearly didn't become a baseball player, by the way, in case that wasn't obvious to you guys.
No, it's clear.
And so, easy, Dan. It's getting a little bit
heavy on the
You're
dime.
hurt. You're very hurt, and I get it. But if you look at the improving ROI at YouTube and you look at actually the ability to monetize this, bottom line is this is arguably the 1 or 2 global ad company, global media leader in the world with a valuation that makes a lot of sense. And I realize there's regulatory risks, but this is a name that I think you have to own. YouTube is a very important part of that.
I would think, though, that YouTube sits right in the target, right, of all the regulators. Like, if there's regulatory risk for Google,
what kind
YouTube
of regulatory risk? I mean,
in terms of the fear that it's video, like extremist videos are uploaded there, that it hosts chats by predators.
I think
look at
well, I'll let you talk.
Videos.
I don't think nobody wants that, right? So cutting that off the site is good news for the company.
Right. If they're able to keep up with it, I think is your point. I mean, the idea of some sort of security measures that they've obviously got to do to be able to keep some of this
money.
off. It does cost money, and that's the money they need to pour into that. There is competition everywhere. We know that. And Netflix always has had this high valuation, and one of the things we've always hung our hat on is some of the international growth. And Oppenheimer is the one bullish sounding thing that we're hearing from right now, talking about India and some of the promising growth over there. So will that happen? That's really what we're banking on right now. If you're long this stock, is some of that international growth. Can that kick in? Because we all know this. Between all of the providers, there is becoming bigger and bigger competition. There's absolutely no doubt about it.
Yeah, just on Netflix, the competition for eyeballs, and we're talking about teens. Obviously, I think that Netflix has said that esports is as big of an issue as anything else out there of losing Marvel and Lucas and Pixar and all that sort of content. Back to Google, this is a really important point that none of you guys had made yet. Google,
Tell us,
Dan. It's a good thing he's enlightening us.
Well, let me tell you what they really lack relative to Snapchat and Facebook. They lack social. They lack the ability to kind of move that content around. And that's a huge differentiator for those. I have teenage daughters, and I see how they use this stuff. Yes, YouTube takes a lot of their time, and much more so, let's say, than Netflix. But the ability to share pictures, the ability to share videos and messages, that's really the killer app to use.
So the TikTok piece of the
TikTok,
equation.
I think is a really important part. And listen, I've thought this for a very long time. I think a huge blind spot for Google, or Alphabet, that has over 7 properties with 1 billion monthly active users or whatever, is that they don't have an ability to move that around other than Gmail. And every attempt that they've ever done in social has not really worked out particularly well. So to me,
should they buy some?
Well, they should. I mean, they should buy Twitter tomorrow.
Right.
You know what I mean? And Snapchat, and just aggregate them, that sort of thing. But to the point about regulatory stuff, I think it's a hard environment to do that. The notion that they would be able to buy a Chinese-owned TikTok is very surprising to me.
I love the TikTok.
Yeah.
You have no idea what we're
He has no idea.
Those are good mints.
It's funny you say that. Like the green apple TikToks are just tremendous.
They're good. I mean,
Very good. But you can't eat like a whole thing of them. It's very bad.